Hey, everybody. By now, you've probably already heard about Silicon Valley Bank, or SVB. If you haven't, to summarize, Silicon Valley Bank is the 16th largest bank in the US, and they just basically were taken over by the FDIC because of some pretty extreme financial problems. To show you how big this bank was or is, whatever the situation is now, they had $200 billion in bank deposits, and they catered to the tech sector. I've been reading a lot about this the last 2 days. I actually wasn't familiar with SVB before all this happened, and it seems like a lot of people were left flat-footed and are going to lose their money. Now, unlike your typical thinking of regular families losing money, it seems like this place really catered to venture capitalists and pretty wealthy people. Some people are going to be possibly out millions of dollars because the FDIC only only insures up to $250,000. So for me and probably you, I don't think we'd have any trouble keeping under that amount. But some of these people, they were well above that. I also read there were a lot of companies that kept a lot of their cash and cash equivalents there. One that stuck out to me was Roku. Roku, as you know, is a multi-billion-dollar entertainment company. They make your TV smart, have a lot of software and whatnot, so that you can view movies and different streaming services. They had several $100 million in this bank, and they're insured for 250,000. Right now, they don't know if they're going to get it back. This is setting aside, basically a bunch of dominoes falling because you have a lot of companies like Roku who had hundreds of millions of dollars. None of their fault, obviously. They just put the money in the bank and trusted that it would be there. Well, guess what? It's not going to be there. Possibly, they might lose it all. This makes the stock drop. This hurts individual investors like you or I who might have had stocks there. It hurts retirees who might have had this in their retirement account. Now, in addition to Roku, there were a lot of startup companies that had their startup cash there. Well, guess what? That's gone now. Maybe they'll get it back, but you can't really plan on that. There's also a lot of other companies that had their payroll there. So Friday hit, paychecks didn't go out. Imagine that. You go to work, you get your biweekly paycheck. Oh, never mind, you don't get your biweekly paycheck because it never arrived. Because the money's all tied up in SVB. Because they were doing God knows what to have their losing their money. Now, the funny thing about SVB is just about a month ago, Jim Cramer, the loudmouth on CNBC, and this is all from stuff I've been reading the last couple of days, actually said SVB was a buy. Buy. That jerk. So he was saying it was a buy. I read that very recently. Forbes Bank was lavishing praise on SVB. Interesting. Now, at this time, Peter Thiel, the billionaire, actually had a fund there, and he was telling people to take their money out just a day or two before all this happened. And he pulled millions of dollars out. Interesting. Also, the CEO and CFO on January 26th timed a sale of some of their stock. Now, as you know, officers in publicly traded companies can't just sell stock. So if something bad happens, they can't just go sell it 10 minutes later. They usually schedule these things for 2 or 3 months in the future. So they schedule on January 26th. Well, they sold not too long ago, which kind of makes me wonder, was the writing on the wall? I don't know. I'm not an insider at one of those banks. If I was an insider at one of those banks, I wouldn't be working 40 hours a week at my current job. I'd probably have a whole bunch of money socked aside doing other things. So basically, what I'm trying to say here is that even if you don't have your money at this bank, it has a ripple effect. And it affects companies who are invested in it, companies who just had their working capital there, their payroll, employees not getting their paychecks. I mean, it's a pretty bad thing. After I was never somebody who was leery of banks until 2008. Then I saw what a house of cards everything turned into. Kind of opened my eyes to things. And after we got married, my wife and I each had a checking account and savings account. I had mine at a bank that is foreign owned. She has hers at a bank that is foreign owned. Now, they both do business in the U.S., obviously, but they're both foreign-owned banks. Both of them are FDIC insured. So we decided it would be a good idea to open a joint account together because we were saving for a house. So we ended up deciding on a local credit union because, again, remember, we both had banks FDIC insured. And again, we had way below $250,000. And we decided it would be a good idea if we got a third bank, which was actually a local credit union that was NCUA insured. Because I don't inherently trust banks or credit unions. I don't trust that if there's a big, huge failure that the FDIC is going to be able to come in and be successful stemming the tide. So I figure, isn't it better if there's some type of a systemic failure that you have your money split up in a few different financial institutions, owned in different countries, with different types of insurance to cover them? So that's one of the big tips is if you have money in the bank, split it up. Split it up between not only a couple of banks, but if you can split it up between one that's FDIC insured and one that's NCUA insured. So at least this way, you might lose part of it, but you're not going to lose it all. And again, losing part of it would mean that would probably only happen if you had, again, a systemic failure and the FDIC was overwhelmed. But then even at that point, the government just might print more funny money and inflate us into kingdom come, so you'll get your money back. It'll just be worth probably half what it was before. So that's one thing. Split your money up to different financial institutions. The other thing is keep cash on hand. I've said this in other videos too, but try and keep some cash on hand because besides not knowing if you can access your money, I mean, what about people who had accounts there? They can't pay their mortgages. They can't make their car payments because the money's not coming out. Now, allegedly, it's supposed to, you're supposed to be able to access it on Monday, but keep in mind that you had to run on the banks, huge lines there on Friday, and you had them calling the police on depositors because they were rightfully ticked off. So kind of, try and keep some cash on hand. And like I said, maybe in a couple of different locations because you don't want too much at home either because then that's potential security risk. So I'll leave that to you on, what your other location or locations can be. And finally, precious metals. You know I was coming up with that. I mean, just based on the inflation risk, it's good to have some precious metals. But with that said, if you need money in a pinch, you can always, sell it on a one-day auction on eBay and get a decent price. You could sell it at a local coin shop, use it to trade for something that you might need. You never know. I mean, there's different things you can do with it. I would personally rather have silver than not have silver. For me, it's pretty easy because I like coins in general, whether they're silver or gold or not, whether they're just nickels. I like them, or pennies, or half pennies, or shillings, or whatever kind of denomination. I just like coins. But actually having silver and or gold's a pretty good thing too. And basically also the other thing I would give you advice on is to stock up on things. I know that there are some people who didn't get paychecks who went back to their house and maybe they couldn't get, I mean, if you're a really unlucky person who had your account there and your paycheck was drawn on there, imagine that. You don't get your paycheck and you can't even access your savings to get the money. So you might be a responsible person who has some money, saved aside for a rainy day, and then you work every day and you get your paycheck, but your paycheck didn't come and your money's in the bank. Well, what do? Well, it's not bad if you at least have all your emergency stuff saved up, but what if you go home and you don't have much in the way of food because you're one of these people who goes to the market every couple of days, buys 6 or 7 items, and that's it. You don't stock up, you don't store anything. So try and plan ahead because sometimes people talk about preppers and they say, you're using scare tactics, you're crazy, you're insane. If I'm going to be low on cash, like let's just say something happened with my income and it's just my wife's or vice versa, I like to know that we can basically totally shrink down our grocery bill substantially because we already have a lot of stuff we would need. We have canned goods or crackers or pasta or whatever we need, whatever we would use normally, paper goods and whatnot. We have all that stuff. So maybe I can knock 80 or 90% off our grocery list for several weeks because we have that food saved up. We have different supplies we might need, again, whether it's paper goods, clothes detergent, dish detergent, we have that saved up. So, like I said, a few things: split up your money between financial institutions and stuff out of financial institutions. Put it in different places. Try and put some in precious metals, and try and like buy extra stuff, because you know what? People think of assets. They think of gold, silver, real estate, stocks, bonds. Guess what? Those tissues you wipe your nose with. To me, that's an asset. The soup that you have in your pantry is an asset. The rice that you might have canned, that's an asset. Those are all assets, and depending on where you are in life and what is going on, that's an important thing to have. You might not think much about a sack of rice you have, but there might be a time when that sack of rice is of value to you. It's a very valuable thing, much more valuable now. You might not realize it, but it is. So, just a few thoughts I wanted to share on this whole thing. If you are not familiar with some of the stuff going on with SVB, there are tons and tons of articles on Drudge Report. I would suggest reading about it. It's really amazing. And there was actually a smaller bank that failed about a week ago. I forget the name of it offhand, but from what I understand, it dealt with the crypto community quite a bit, whereas this one dealt with tech companies in general. So definitely take a look at them, read what's going on, and the effect on the broader economy, because I have a feeling that this might not be the last one we see in the coming weeks or months. All right, have a good one, and if you like this video, I do appreciate the thumbs up. Talk to you later.